Welcome back, still tuned into the market. I'm Avan Dabash joining in, and yesterday what a session it turned out to be. 11,000 on the screens. You had 4 straight days of the rally play out, and it looks like with the kind of handover we've given from the global markets, it could turn out to be a fairly healthy trading session yet again. Jayesh is standing by as always to give us a snapshot of what exactly the trade setup looks like this morning. Jayesh, take it away.
Morning, Avan. So finally, we have 11,000 on the screen for the first time since 6th of March. In fact, what has happened in the past few days is the Nifty and the Nifty Bank have both rallied more than 1% during each of the last 3 sessions. Now, just to give you a sense of, where the resistance point could lie ahead for the markets, as far as the Nifty is concerned, that would be 11,250 or thereabouts, because there is an open gap that we have created on the Nifty. Also, the Nifty Bank, which has been the rank underperformer, that is once again, reattempting to claw back above the 38.2% retracement level, which stands at 22,420. So, there is some room of catch-up for the Nifty Bank as well that lies ahead. As far as broader markets are concerned, the Nifty midcap index is, less than 100 points away from the 200-day moving average. So in case we cross over and stay above that level, there could be renewed buying interest that we could see in the broader market space as well. But as far as sectors are concerned, the Nifty Pharma index yesterday gave some signs of worry because it made a bearish engulfing pattern. Not only that, but yesterday's open was also identical to the highest price, and it was the only underperforming sector that we had, which closed negative 1.5%. But most interestingly, what I observed in the market yesterday was the India VIX index. Now that, of course, snapped its 3-day losing streak. But on a day when the market actually went higher, the India VIX also surged. So, keep an eye on the volatility index going forward.
All right, lots to watch out for, and yes, volatility will be of prime importance. Let's get a move on and connect with our chartists, Dr. C.K. Narayan as well as Kunal Bothra, who join in as always. Dr. Narayan, going to come in with you. Do you think that we'll be bracing ourselves for a volatile but a pretty ferocious run-up in the markets, and share with us your top ideas?
Good morning, Avan. Good morning, everybody. Well, ferocious might not be the word that I would use, but then the move up should definitely continue. And the reason for saying that is, the Nifty has worked its way up to about 11,000 now, starting from here and going upwards till about 11,250, 11,300 levels. The past, the recent past, not too distant one, is riddled with a lot of gaps and congestion formations, etc. What this typically does is that they all act as resistances to upward price action, and therefore the progress from here may not be so swift, although we would like it to be swift, and we will think that 11,000 crossing should produce a substantial new sentiment domino. But I think the sentiment is already quite poised towards the bullish side, that it does not require fresh dominoes to shoot it up further. Now, the bullish sentiment is also tinged with quite a bit of caution, because not too many people are sure of why this is happening, although they are happy to participate. So I think market pace might slow down a bit, although its direction may continue in the same way as earlier. So, bullish trends are still to be followed. So that as a background, I would recommend a couple of buys today. First up would be Infy as a buy. So I think Infy is a stock which had got into a small sideways price action angle of sorts on intraday charts after the big gap up 3 days ago on super results. And at the close of play yesterday, it moved up pretty smartly and is now all set to challenge the upside of the rectangle. The ADR was quoting well, so we should expect that prices could open better and trade better. And if there is a successful breakout, the minimum target you're looking at is about 965. So one can initiate a long position with a stop at 920. The second stock I would recommend is Asian Paints, which after a bout of some consolidation, mild reaction, I think Asian Paint is once again ready to roll, and therefore Asian Paint is a buy with a stop 1730, targeting 1790.
From Dr. Narayan, some interesting names that he's got on his radar. Kunal, what is your estimate of where we're headed this morning? Is the upward move likely continue? Are we bracing ourselves for some sort of a correction? And share with us some of the technical ideas that stand out according to you.
So good morning, Avan. Yes, I believe that the markets are going through one of their I think the best runs in 2020, even before the start of 2020 or at the start of 2020. I think we had not seen such kind of a pace for the markets moving up higher, and of course it's been led by what's happening across the globe and especially what's happening to the US markets. And given the market texture as well, yesterday we managed to break back above its major psychological mark, the 11,000 levels as well. The supports are rising up higher. So from 10,500 you were discussing last week, the supports are now at 10,700 till yesterday or day before, and till yesterday I think the supports have risen back above those 10,800 or maybe 10,900 zone on the Nifty. So the supports are rising on the index, and the index is moving on to a different sort of a momentum altogether. In that regards, I believe a lot of large cap names, a lot of sectors are now trying to participate one by one. So I believe in that regards, maybe the chance of a Nifty coming back to 11,200, 250 is pretty much higher. But again, many of the sentiment indicators I pointed out yesterday as well have come back into overbought territory, like the put call ratio, which is now at 1.7. These are extremely elevated levels for put call ratio. So longs have to just adhere one bit of caution over here. Two buy calls I would initiate. First one is about Asian Paints. I think the stock yesterday managed to just about confirm or come very close towards a breakout point. It's a double breakout for the stock price if it manages to confirm about this 1750, 1755 zone. So would suggest a buy on the stock, targets of 1820, stop loss at 1700. The second would be a buy on Chola Finance. I think the stock again is forming a bullish flag pattern. We've seen many of the NBFC stroke HFC names do exceptionally well in the last few days. And Chola Finance is also on the verge of a decent breakout on the short-term charts. Buy with a target of 225 and stop loss at 209.